The following presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 27th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We need to make that little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Internationally, 727-445-1044. So let's go ahead and get this show started on magnificent and magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow off 23 points, trading out 20,573. S&P basically totally flat, trading at 2343. NDX 100 up 17 points. The composite up 13. The Russell's back a point. The semiconductors are up 3 points. The transports are up 8. Gold is up 5. Silver's up 30 cents. Light sweet crude back 22 pennies. Leading the charge here to the upside is Priceline up $9. Regenerate Pharmaceuticals up 10. Intuitive Surgical up 7. Coherent Inc. up 5. Universal Health up 5. To the downside is AutoZone, AZO, down $6. That's less than one tenth of a percent out there. You've got Tal Ed Group down 5%, $5. Fomix Pharmaceuticals off 4. WageWorks down $3.50. So where do we want to begin? I have a request from Scott that we'll take a look at Polaris Industries. Let me go ahead and give you a feel for what the markets are doing, what we should look at. And during the second segment, let's come back to take a look at Polaris Industries out here, more from a longer-term standpoint from Scott. You too, you can send me an email, by the way, steve@tfnn.com, inside the Tiger's Den. Any ping will do. So if we take a look at the markets, when they opened up last night, let's go take a look at the most important market right now. In fact, let's just look at the equity futures contracts out here and see what's going on. Really, our focus is, well, quite frankly, the focus is on all four of these. The ES Mini is in the upper left, NQ is in the upper right, Dow is in the lower left out here. So if we let's start with the ES Mini out here and see what it is that we see. Actually, today, right now, as we speak, is a hammer candle. I don't know how this contract is going to close today out here, but what's most important to pay attention to for today's close, really it's the weekly close, you and I talked about this last week, was the 2336 level. It looked like early this morning, actually, with last night's move to the downside right away, as it was cruising through the 2336 level and getting all the way down to 2317, that we were going to see an intermediate term change in trend. We will not see that until we see a close below, on a weekly basis, quite frankly, a close below 2336.85. We don't have that. However, it was really the NQ out here, even with its push lower overnight. It was never really got that far below the bottom of that weekly profile, which is a 53.33. The low was 53.17. That's really not that much further below support. And you've also got the bottom of a daily box down there as well. So it's a real key level to be watching. I believe that's the most important level to be looking at with regard to the market. Now, we can clearly say, as we speak right now, as of 1:10, and you pull back each of these daily equity futures contracts, that they have not been able to bust out the lows. I don't know what the close is going to be. And that's going to be important. By the way, in the Dow, the number to be watching is going to be 20,511. You're trading at 20,513 right now. But you know the expression, if you can't bust out the lows, you try to go back up to the highs. All right, can't bust them down, you try to bust them up. Inside the NQ, that level would be 54.41. I don't anticipate that the Dow would, or the ES Mini would get back up to its highs, but the NQ, yeah, that's still potentially in its cards. Now, earlier this morning, as the market was moving lower, the NQ specifically, as was moving lower into the about 10:30 time frame, I believe. What time was it exactly? Well, on the 30-minute chart, it was 10, but we didn't get the confirmation until 10:30, was a seventh wave move to the downside. Right, you can see the letter G on my screen out here. And you know that we pay attention to Stevie Wonder singing in the key of G. Of course, right now I'm not going to sing in the key of G. My throat is still, let's say it's touch and go, as well as the rest of the soreness of my body as we speak. But in any event out here, once you get to that seventh wave, you have got to pay attention. In fact, this case here, not only did it in one fell swoop, did it make a seventh wave move out there, it closed above its 30-minute TAS market profile, which was really set up. You're familiar with this. This was really set up as a bearish, biased profile. And that was saying, okay, we're moving higher. Now we're all the way back up to the highs out here. So it's made a 100% move of a move. It could be that this is the area where things begin to peter out, so to speak. And my apologies to Peter out there, because I'm not really sure where the peter out thing really came from, except off the top of my tongue out here. I would say that we've got probably another, more likely than not, we're going to go test the highs in the 53.94-ish type area. But that's looking at the NQ. Now, it was not just the NQ 30-minute chart that was giving you the at least the bounceable bottom area. If we take a look at the Dow as an example, we pull this over here, you're going to see it too was making a seventh wave move to the downside. If I update this chart, was price also moving lower and doing with less relative energy? It most certainly was, as you see those diagonals from upper left to lower right. So, and it was making a key reversal session out there. Now, the real resistance zone inside the IM is this little dashed green line at about 20,560, give or take out here. So you saw that there was a bounce or bottom coming. The question, is it a bottom? I don't think so. I do not think so. I think this has been one heck of a nice counter trend rally thus far, but we want to pay attention to these levels inside the equity futures contracts that are on my screen. Inside the Russell 2000 as well, if we pull up its 30-minute charts out here, what was it doing this morning? I don't think that it made the seventh wave move. I think it got to wave number 8. Yeah, it ended up getting down to wave number 8 out here. But really, the YM, the NQ, giving you bottoming signals. Now, in the case of the Russell 2000, you can see its price oscillator on a 30-minute chart just getting back towards the zero line out here. So turning down from here would be very bearish. Inside the NQ, by the way, if we go take a look at where it's at, that price oscillator now above zero and rising. That says that in order for there to be a failure, this says a 114 inside the NQ, you need to see a close below 53.56. That number would change throughout the session. So you had nice bottoming, short-term, I do believe, bottoming patterns inside of the 30-minute equity futures contracts out there. Why is it just a short-term bottoming pattern? Sellers, believe it or not, are still the ones in control. They've got the ball. It was just a little fumble, or maybe a trap. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So for Scott, let's go take a look at Polaris Industries out here. And Scott was looking, kind of taking a look at more from a long-term standpoint. So let's look at it on multiple time frames. First here, Scott, if we take a look at the daily chart for Polaris Industries, what we're going to see out here, and Scott's taking a look at maybe Polaris Industries setting up a very long-term A to B equals CD to the downside. And it would be a huge one. Look, if I just put this on a, you'll see it here. Here's what the question is. Is it possible that this is a large A to B equals CD to downside? Now, I don't know the answer to that as we speak, but let's go try to figure that out. Here is what, in essence, Scott is looking at. It moved down to $12.72, something that was $159 or so not that long ago, back in November 2014. I guess that's a long time ago, but on a monthly chart, it doesn't really seem like it would be that long ago. Now, to answer that question, I don't know if it's really going to do that or not. Instead, let's go see what it is that we see out here with regard to Polaris Industries. The first thing, Scott, if that is going to occur, is you're going to need to see Polaris Industries close below 75.83. Now, 75.83 is the bottom of its weekly profile, and it is very possible that Polaris Industries is going to get down to that level. Today is sort of a telling day for you because price is down below the top of that brand new weekly profile. Now, that weekly profile, by the way, has a bullish bias to it, and that means 75.83 to 77.68 should be good support on any kind of pullback. Plus, there's some nice breakout, wide-ranging bars November 9th, November 10th, just a couple million shares out there. So that's not like it's gangbusters big volume. It has wide price spread. Accelerated volume is really stretching the term accelerated volume. So, of course, for the A to B equals CD to occur, you've got to be able to bust out the low from September 16. But right now, I'd be watching 75.83, just like I'd also be watching 89.25 out here. Now, I'm going to go ahead and put up the monthly chart. This is using my other system out here. And when we take a look at Polaris Industries, the other level, Scott, that you want to watch is Stevie's oscillator unchanged line. And I know that you are tracking this as well. So that's a price level of 86.46 as we speak right now, 1:20 in the afternoon on March the 27th. Because if we see a close above that this month, any month, well, of course, that number will change. Well, then that says, something to think about. As long as on a monthly chart, Stevie's red line continues to hold as resistance, you have a falling price oscillator below zero on the bottom of your chart and says price can move lower. Now, you can see Stevie's red dash line out here, really, in essence, lining up with that TAS weekly profile level. So that's why you're going to pay attention to that as well. So the monthly chart is saying, hey, this is not a healthy checkup, at least not just yet. If we look at the weekly chart out here for Polaris Industries, the weekly chart really shows us similar things, just like the NQ showed us one of those price relative strength. No, it was the Dow. The YM showed us the 30-minute chart, a price relative strength divergent pattern. So too on a weekly basis is the case for Polaris Industries out here. So and the price oscillator continues to flirt with the zero line. Right now still below zero, so it is the bears that have control of Polaris on both the weekly and the monthly. And the daily chart that you and I just taken a look at shows that it dropped below there. So is this an A to B equals CD to the downside? I don't know. As I look at the chart here as we speak right now, I don't know. I don't know. It'd be a huge move to the downside, that's for sure, on something that was a high flyer out here. I think you have to just take this one day at a time out there. So that is for Scott on Polaris Industries. Now, in the first segment of the show, and thanks for writing in and thanks for asking out there. Hey, we've got a caller. Now, I don't know who it is because I don't see it, Steve-O, on my screen anywhere. But so we're just going to go to this caller. Who is calling, can I ask?
Hello, this is Garo from California.
Hi, Garo. How are you?
Very good, and you, sir?
I've been healthier, but I'm doing okay. Thanks for asking.
Yeah, calling today regarding VXX. That is the opposite of Spider. I want your opinion regarding this going up to at the time is 1654. I'm looking at $19.06 on February the 24th, the high of that day. You think it will reach there? It will cross that 50-day simple moving average? And by that time, Spider will come down and hit that 200-day, which is around 220, 221.
So you're looking at, is the ticker symbol you're looking at is VXX, is that correct?
Yes, sir.
And you're looking at it on a daily basis right now?
Yes, sir.
Okay. And right now this is trading out at about 1654.
Yes, sir.
Okay. And you're looking to play this to the long side or to the short side?
Yeah. On the long side, the way that I'm looking at Spider today, it just broke that 50-day moving average on the simple and is hanging there. And it is below its 5-day simple moving average, which is a very bad sign. If in the next 2 days this doesn't go up and cross that 5-day, which is $234, then there is no other way just to go down all the way to 200-day simple and exponential, which is around $221.
See, that's okay. So VXX I have is $17 and using 200 and things like that. So I'm not sure I've got the right ticker symbol up on my chart. That's why I was at. So V is in Victor, 2 X's. Is that correct? Or are you just looking at the S and?
No, the VXS is the opposite of Spider.
Yeah, the short-term futures exchange traded note.
Yes, when that VXX goes high, the Spider comes down.
No, sure, I understand that. Okay. Well, here's on a daily chart. So if we're both looking at the same chart out here, you've got your parabolic SAR that 4 days ago gave you a long signal. Is that correct?
Yes, sir. Yes, sir.
Okay.
Absolutely.
Okay. So what I show on the VXX is that the 50-day simple moving average is 1818.
Yes.
Okay.
Yes,
And when are you going to consider taking the trade on this? At about what price point right now are you looking at taking the trade on this?
Now is the time to get in.
Now, okay.
Now the time. Anytime today, And the way I'm looking at it will go high of the candle, which was hit on the high of it was $19.06 on February the 24th.
Sure. Okay. Got it. Yep. Okay, good. Okay, so here is and you're using that 5-day simple moving average with regard to a potential trigger point, which right now on my screen is priced out at about 1666 and prices at 1655. So the confirmation on this will be when you see this equity close above the 1714 level. That happens to be its TAS daily high. Hey, Garo, can you stay on the phone through this break for me?
Yes, sir.
Okay,
Absolutely.
So we'll come back. We'll take a look at the VXX with Garo, the iPath S&P 500, VIX short-term futures ETN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're on the line with Garo in California. We're taking a look at the ETN VXX, which is the iPath S&P 500 VIX short-term futures contract. Now, Garo, during the breakout here, what I did was, in trading these vehicles, it's so important to take a look at what the underlying mixture of the instrument is. In the case of VXX, right now, the April contract, so this is the components inside here, and this changes daily, are the April and May futures contracts for the volatility index. April represented, as of Friday's close, 83%, and May was about 16%. So it's really important for you and I to focus on the April futures contract. And what I've done is all of your normal tools that you would use, the 5-day, the 50-day simple, the 21, the 200, the parabolic SAR, I've turned all of those elements off for the moment in order for me to be able to give you the best advice that I can as far as what I see. Because in trading that futures contract, in order, now you know that you trade, intraday, short term, and so forth. But in order for a change in trend to occur on this futures contract, and be careful with regard to when this thing, I'm not sure when the rollover is, it's not today or anything, but if you take a look at these daily TAS market profiles, these are just the daily. The red happens to be the very top of the box. The blue or the cyan color is the center of the box, not always located in the center. It's referred to as the point of control. And the importance of the center of this box is really in proportion to where is it located between the top and the bottom. The bottom happens to be green out here. And what you will notice, I'm just coming back into the November 14th time period out here, and you will never see a close above the top of the box, that being the red line out here. On Friday, there was a test of that level. Today, there was a test of that level. And on the futures contract, this is what I would be really focused on and paying attention in order to try to, now you may buy it at a lesser price trying to take that momentum move to the upside. Cool, I get it, no problem. I would say the actual buy on this would be, or on the VXX would be when this futures contract got down and tested 1330, maybe 1296. From a momentum standpoint, where the moving averages and everything else would come into play, the parabolic SAR would really come into play, is a close above 1431 on a daily basis, because that is the profile level that should fail if the VXX is really going to have a lot of momentum to the upside. Otherwise, really traded on an intraday basis, maybe utilizing a similar set of tools out here, but you really need to see at this stage the April futures contract for the volatility index close above that daily profile high. And I know you're seeing my chart on TigerTV right now, correct?
Yes, sir. Yes, sir.
Yeah, I think that this is with regard to trading the volatility index, I think this is one of the most important tools, and it's really where we can see these market profiles really stand out and shine. Again, intraday, I can get different tools that you might use, but to really see some kind of change in trend out here, we need to see these significant levels of resistance fail, which they have not for a long time. Does that help? Does that help?
Maybe I'm wrong. Yeah, I cannot be right all the time. Absolutely, I cannot win all the arguments each and every time. Nobody can do that.
Sure. And it's not that you're wrong. It's that what I want to be able to put the momentum piece of this trade on your side, and if I would for me. I would be focusing my time with regard to VXX. I would make sure I have the April and the May futures contracts up on my screen as well, utilizing the different sets of tools, because it's really going to be more important to see where these are trading in relationship to their support and resistance levels than that ATN is. This is going to be more pure to give you a better signal. Now, in this case here, as an example, the parabolic SAR, my dot of support right now is at 1311. So on a daily basis, that certainly is something you'd want to be focused on. The 5-day simple moving average happens to be 1387. We're at 1382 right now. So you could be right, but you'll really be right from the long side if we see a close above the 1431 level. Okay, my friend?
I see. Very well. I'll keep an eye on it, sir. Thank you for your information. I don't have all this information that you have there. I really don't have. My information is very limited and very primitive. But that's good I asked you. That's good I called and asked you. I'll keep an eye on it, sir. I thank you very much. Thanks, sir.
You bet. No, always good to hear from you. That was Garo in California. Let's go out to Denver and speak with Ron. Ron, thanks for calling. Thanks for holding. How are you today? Do we have Ron? We may not. Ron, you there? Earth to Ron. No, I guess not. G-I-I. Is that the ticker symbol? That is. Oh, Ron, I think I hear you.
Yeah, okay.
Okay,
yeah,
good.
Yeah, I was talking about this retail stock, and I bought puts on it last week. It cost me about the 22.5. It cost me 95 cents, and I just wondered, because the market's moving back up, do I go ahead and, I've got a better than a double, do I take my profits, or do I hold for more, or what are your thoughts on GIII?
What was your trading plan? What was your trading plan when you got into it? What was your target?
Well, I know their numbers are coming out. It's a retail company, and I figured I heard their numbers are going to really be bad, and they were. They came out today, and they lost about 47 cents. They expect to lose 9 cents. They're going to lose another 50 cents next quarter. And it's just one of these retailers there in New York that's getting killed by Amazon. And I thought if it broke 20, it could really drop, but I'm not sure.
Okay, so let me see if I can assist you here. I'm going to switch over to. I've just got a different chart on my other system. I just want to see if there's any kind of potential bottoming pattern anywhere that I can assist you with, and the answer is no. So I'm not going to put that chart up on my screen. First of all, congrats on picking up on this trade out here, and for doing what you did. So taking the action. That's we applaud you for that.
Well, every once in a while, But anyway, I was just wondering, should I hold for a lot more, or should I just play it safe since the market's coming back a little bit? I don't know. I was just wondering what your thoughts were. So I have 7 of them.
Yeah. So the market coming back. When you place this trade, was the direction of the market critical to you?
Well, I did think that the market would get hit if this thing didn't. Well, not so much, because I just thought the retail stocks are weak.
Yeah, got it. Okay, which was kind of what I was thinking. The gap down today. So with regard to GII apparel, this had a breakout all the way back in 2013, June 3rd, and there were 7.2 million shares, the bottom of which was 2106. You're trading at 1957 right now, 5.2 million shares. It's going to do similar volume, maybe more, to the downside and take out that level of support. Look, maybe this is going to get all the way back to 866. I don't know when that would be. At least take your profit off the table, or your principal off the table if you can.
Okay,
it's
do that.
Never, and then you can hold on to the others, and you are in a free trade. I don't see support in this, is what I'm saying. I don't have a sign of support just yet. Okay. Hold on through the break.
I'll take part of it.
Hold on through the break. That's Ron in Denver.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Ron, do we still have you on the line here? Oh, good. So the chart that I put up on my screen here, the bottom is just S&P 500. The top is GIII out here. And, at this stage here, as you know, this thing topped out back in July 2015 and has been headed down ever since. So it really has ignored, any movement that we've seen inside the S&P 500. I think you've nailed a good trade. I don't see a reason for you to take the trade off. In other words, coming back into a level of support or prior swing point with light volume or something along those lines. That doesn't mean that it can't eventually turn around out here. Could maybe it gets bought out. Any number of strange things can happen out here, and that's the reason to suggest, hey, you have the opportunity to go ahead and get your principal back, and that way you're 100% protected, and then let the other 3 or 4 of the contracts continue to play out, and you can always take those off the table at any point in time. But you're really in a free trade out here. I would anticipate that this is going to get down into about the $15-ish level out here, and you're at $19.58 right now. So that's the way that, and it could get lower. There's no question about that. I don't know enough about the company. You'd probably even want to understand a little bit about the fundamentals of it. Is for any reason, I don't know where these guys have stores and things like that. Are they?
They're in New York. They're in New York, but it's Donna Kareem, I think, or something. But anyway, they're higher. It's a retail, higher price market, and they're just having a tough time.
Got it. Yeah.
So I'll do what you say. I'll take some off. I'll take about 3 and hold on to 4 of them.
Yeah.
And I appreciate
think so.
that.
Yeah, no problem. So I don't see anything that's stopping this from going lower, but you've been given a nice gift here. There's nothing like having a free trade.
Sure. Okay. Thank you, Steve. I appreciate it. Thank you, sir.
You bet. Thanks so much for calling. And just to kind of like to follow up, folks, with regard to that call, Ron's call, really with regard to Garo's call as well, he's taking a look at, hey, the S&P 500 is likely to head lower, then therefore the volatility index futures contracts should go higher. Yeah, maybe. But and I mentioned in the first segment of the show that the charts were suggesting to you and I that this was nothing more than one heck of a nice counter trend rally today. And I said that it was really the sellers that are, believe it or not, in control. Now, I say that in just simply reading the advanced decline oscillator signals from the bottom of the chart in the lower left, New York Stock Exchange, the one next to that, NASDAQ Composite, the one next to that, the Dow out here, each of them being below zero. In the case of the Dow, we've pretty much been below zero for a while, ever since that March 1st nice top out here. It was actually really not March 1st, it was March 3rd that we've pretty much been below zero. So this has further to fall. New York Stock Exchange been below zero since about the February 29th, the March 1st timeframe, it looks like. This has much further to go before it gets to a oversold condition out there. You know, you and I have been through those, minus 150 or lower levels out here. We're nowhere near that as we speak right now. And the NASDAQ Composite, as nice as a move as the NASDAQ Composite has had, as the NQ has had, as the NDX has had, it's still in the hands of sellers. So you've just... I'd really like you to be careful. And even though the volatility index has pulled back, it's at 1328 right now. It's still above the 50-day exponential moving average, which is priced at 1201. So there's not anything out here in the charts as much as those that are short. That's including me out here. Would like to have just seen, you know, the earth. I would rather be in the short trade for a longer period of time and not have to make those decisions should we close that out or not. And today would have been, if it was a horrible day, would have been, and maybe it will at the end of the day. And you know, I don't like to say the at the end of the day thing out there. But what I was really referring to is the mere fact that this morning the volatility index, the spot VIX index, was up 13 or 14%. I don't know, 7:45, 8 o'clock, 8:15 or so. This morning, you know, and then I said to myself, oh, this could be an ugly day. And if it's an ugly day, the spot VIX index is going to have a greater than 10% one-day rate of change. And we're going to have to figure out what do we do, because that could be bouncer bottom area territory. And so yeah, if you're short, you'd rather just have nice gradual moves to the downside, and it lasts for a period of time out here. And I'm not against calling a bottom. I just don't see it just yet, at least not as a 147 in the afternoon out there. And if it changes by 4 o'clock, then, you know, I'll come back and change that viewpoint with you. And we can go to any number of charts out here. We can go to daily charts. Let's just look at the NDX 100 as an example. And the NDX 100, as we put this out here, this thing does not get back into bullish type territory until we see it close below 54, above 54.22 and a quarter. Where the NDX 100 is likely headed to, where I'd like to see it get down to, is its support trend line, which is at 51.47. It's a horizontal level of support out there, but nonetheless, 51.47 or 53.72. What I'm really watching in the case of the NDX, you and I spotted this last week. You identified that Apple had made a top. We took a look at was it a seventh wave move or a price relative strength divergent pattern? I don't recall which one it was that you identified, but you identified the top out there, and you were absolutely correct. You were spot on with regard to identifying that top in Apple when everybody else couldn't find that top in Apple. You did. And one of the other things that I'm watching inside of Apple is kind of a cool tool out here for the NDX, and it works on Apple better than anything else. It's the Chaikin Money Flow Index. Many of you have this tool on your trading application out there. And if you take a look at that money flow tool, that's the bottom portion of my chart. And right now the reading is 5.19. Earlier today was getting down really close to the zero level. Now I don't have this thing at zero right now, right? I've got this thing at like a minus. What do I have? Whoops, that didn't really help. Give me a moment here. I'm going to move this. Let me pull this. Come on. See if I can actually get this to work proper. I'm just trying to scrunch. There we go. So I'm trying to scrunch. Let me move this thing to zero so that it gets shows us quickly. Oh, that didn't work. Let me try that. Does that work? Frustration. Properties. There we go. Let me get this thing here to 0. So if we set this at 0, see how close we are to the 0 line out here on this money flow index. What I can tell you is when it's above 0, whoops, let me get to daily figures out here. When it's above 0, it's very positive, quite frankly, for Apple. And which then, therefore, you would say is fairly positive for the NDX 100. But it's getting very close to trying to potentially tick below and move below the 0 level out here. Now, we already have a top that is formed inside of Apple. And a key reversal session when it did that. That was on the trading day, it looks like here, of March the 22nd, I believe it was. So I'm just, many of you have this tool out there. Go check it out yourself. Put up the Apple chart and go ahead and move that line around. You can see where a bullish or a bearish stance is. I can tell you it's getting, if we see a nice close below that level, it'll just be one more candle on the cake of a further decline to come in these indices. Those are the messages of these charts. Steve Rhodes with TFNN. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 52. S&P is down 5. Brian writes in, I'm going to paraphrase here because if I read this whole thing, it'll take up a few minutes. But in essence, he's writing and saying, hey, on Thursday, you said, Steve, you were very bullish about the long-term aspect of the market and considering the $2.5 or $6 trillion in overseas cash that could be repatriated back here based on Friday's actions by President Trump and so forth. In essence, does it give you concern that he won't be able to get the things passed in order for that to occur? That's a great question. When you and I trade, here's one thing that is unique and that I think each of us here that we have learned to be able to do, and it is to be able to spot and identify maybe a contrarian viewpoint. So, for example, when you and I pay attention to these patterns out here, we take a look at a seventh wave pattern, we take a look at price moving lower or higher with less relative energy, in this case here, to help to identify a bottom. Folks, or Brian, to answer your question, you are assuming that I believe that President Trump intended on passing health care legislation. I think everybody else out there has got it wrong. He didn't want this thing to pass. He wanted to push this thing through. Does it hurt him? Are you kidding? He doesn't have a health being able to solve the health care issue. He doesn't want his name attached to that. In fact, in this case here, this guy orchestrated a beauty out here. A beauty. Sure, he'd like people. I don't think he's disintended out there, but he wanted to get this thing pushed through. If it passed, then so be it. Then more strength to his party out there. But by not getting it passed, it puts all the pressure really back on the existing party that passed the bill to begin with, or he can blame it on the folks that wouldn't pass the bill. I mean, he has got cover like you wouldn't believe out there. It was a beauty, and he's got everybody snookered, believing he's got the media, he's got No, Brian, to answer your question, no, I believe that the tax reform issue or getting those dollars back here to the states are going to set these markets on fire like you have never seen. Well, it's going to pale in comparison to what the Federal Reserve was able to do with their increase in their balance sheet, by $3.5 trillion. The repeal on for let's call it the 1%ers out there for the investment tax, if this bill had gone through, was only $23 billion. It's no big deal. Not that $23 billion isn't a lot of money. It's nothing compared to the $2.6 trillion or $2.5 trillion in overseas cachet that will end up coming back here. And I think the media, guys like Upchuck Todd out there, they've got it all pegged wrong. This guy is working them over and has everybody looking left while he is really going right out there. And nothing could have proved it to me more than I had a lot of drive time, unfortunately, this weekend out here to listen to everybody be on the absolute. They are asking the wrong questions. This much I know. If we ask the wrong question, we're going to get the wrong answer. Asking the right question is what it's all about. And, Garo asked the right question. So this is it. Just, folks, we watch these markets. You can watch these patterns play in and out. These are all human beings. These are all human motions that are out there. And so, Brian, it's a great question. I don't believe things change at all. If anything, for me, it just cements the idea that it is going to eventually come to fruition. He just snookered his own party in having to get behind him on the tax reform stuff out there. Who is Upchuck? A guy named Chuck Todd out there. Hey, P, I've been watching Meet the Press since I was 17 years old. I sort of love that show, even if I don't always agree with their ideas. That guy is the absolute worst host I have ever seen doing that show, and I call him Upchuck. Hey, have a great day, folks. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.